Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you, and a very happy Friday. In today's little episode, I want to discuss the current sort of like almost Friday feeling the market is currently going through, and a couple of other big stories also breaking today as well. We'll discuss a little bit about that. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So like I said at the beginning, the market, I think at the moment is going for sort of more like a Friday feeling. It's quite sort of, I'm going to say not relaxed, but quite sort of like sideways, so like it's catching its breath, which I'm not surprised is catching its breath because we have had a horrendous week of volatility in the market. And so I can understand it, but there is another reason why there is a little bit more of a calmer nature currently on the market. And that is the expectation of the Fed raising interest rates on the end of July by 100 basis points is cooling. Because don't forget, with that CPI data, that shocking CPI data of 9.1%, and the actions of the Bank of Canada raising interest rates by 100 basis points, the market generally had felt over the last couple of days, last couple of sessions since that CPI data, that the Fed will be very aggressive and raise rates by 100 basis points. But that expectation is cooling a little bit. Instead, the market is sort of expecting them now maybe just to do 75 basis point rate hike come the end of July. And the reason for this cooling or of anticipation is because one of the hawkish members of the Fed, Fed Governor Christopher Waller, he said yesterday, and I quote, "With the CPI data in hand, I support another 75 basis point increase." 75 basis point increase. He also said, this is key. This brings me on to something I want to talk about as well. He also said, "We have important data releases on retail sales and housing coming in before the July meeting." And he then added, "If that data comes in materially stronger than expected, it would make me lean towards a larger hike at the July meeting." Okay, so though he said with the CPI data as it is, that was shocking data as well, don't forget, 9.1%, 40-year high, highest since 1981. Even with that data, he said 75, okay, 75. But he said retail sales and housing data, if the retail sales comes in better, then he might go for 100 basis points, which leads me to this, because retail sales is coming out today at 12:30 p.m. UTC. And don't forget, US retail sales is important because the way modern day economies is structured is we need people to spend their money, to put money back into the system to buy things. So if there's a drop in that, then there's often a drop in economic growth. So this is a key. It's often a key event, but I think this might make a bit more of a center stage event today based on his comments. Okay, so retail sales is due at 12:30 p.m. UTC. The expectation is 0.8%, okay, which is an increase from the previous reading of negative 0.3%. So quite possibly what we could see, if we do get quite an impressive retail sales number, the market then might jump to the conclusion that 100 basis point rate hike is back on the table. At the moment, the market is cooling to that idea. They're thinking 75, but if we get a better retail sales, we might see the market react towards thinking that they're going to do 100. So we might see further dollar strength. Okay. At the moment, it's quite sideways, and we'll look at the market in a minute. So yeah, that's going to be interesting. That's an interesting comments he's made, and that's going to be an interesting event to watch. That's 12:30 p.m. UTC. What else is happening? Well, earnings season is now in full swing. JP Morgan Chase and Morgan Stanley kicked it off yesterday, both with fairly negative readings. Don't forget, as I mentioned, Morgan Stanley, their quarter two profits was 2.4 billion, which is dramatically lower than their 3.4 billion profits of quarter two last year. So that was quite a shocker. And don't forget, JP Morgan also was down about 28% in their quarterly profits. And don't forget, they had that worrying talk about putting some reserved cash aside because their expectation of people defaulting in the future. So, anyway, we have two other banks today announcing their earnings. It'll be interesting to see what they say. First of all, we have Wells Fargo to announce their quarter two earnings at 11 a.m. UTC, followed by Citibank to announce their quarter two earnings at 12 p.m. UTC. So again, like I say, earnings season is upon us now in full swing. And obviously the banks are starting it off. So it'll be interesting to see those developments too today. Other news, and it's not gold, don't worry. Other news, China's GDP fell by 2.6% from the previous quarter. This is in fact the slowest growth China has gone through since the start of 2020, when it was the height of the pandemic in China. Now, the reason for their slow in growth, obviously, is because of the latest COVID-19 outbreak they have there and their zero tolerance towards it and all their lockdowns. So this is the outcome of the lockdowns China has been putting its population through because of COVID. So it'd be interesting to see, interesting to see how that fully develops. Because again, there is fear that China's going to go back into another lockdown again because of their zero tolerance attitude to COVID. So yeah, that's the other breaking story today. So the markets might start getting, sorry, throat's so dry, might start getting a little bit nervous again because of the China situation. One other news I want to discuss, it's a lot of political drama. A couple of weeks ago it was the UK, now it's Italy, obviously. On the recent developments, obviously, of the political crisis happening in Italy, Mario Draghi actually did resign, but his resignation was rejected by the Italian president, saying he needs to stay on. So how this story develops is going to be interesting to keep an eye on. Italian bonds increased on the back of this, which is bond yields increased on the back of this, which is not often good news, because don't forget, as I say, with bond yields, okay, obviously for the investor, they get more when the yields go up, they get a higher return. However, yields go up higher, it means it's more of a risk to the investor as well. So it's not a good sign. I mean, for example, German bond yields are about 1.8, so they're considered not risky at the moment. Italian bonds are 3% plus, so they are considered high risk. So that's not a good sign either. But anyway, I think that this story is catching the headlines at the moment, and it is having a minimal impact to the euro, which we'll look at. What I would like to say is next week is an absolute huge week for Europe. Huge week for Europe. Remember this date, the 21st of July. 21st of July, okay? Remember the number, 21. Because on 21st of July, we have the ECB interest rate decision, okay, and the press conference, which, okay, I think the expectation is they're still going to be pretty dovish and raise interest rates by 0.25 basic points. They need to do more, I think. Many analysts are thinking. So that's going to be an event, but it's overshadowed on the same day by something even bigger, and that is whether or not Nord Stream 1 reopens. Don't forget, on Monday, I discussed this. I said that it was closed down for routine maintenance, 10-day maintenance, and then the fear crept in that the Russians won't turn the taps back on, okay? It's supposed to reopen on the 21st of July. So, and don't forget, French President Macron said, prepare for it not to reopen. So there's a lot of fear about this. So 21st of July is going to be key for the euro and key for Europe, whether or not they turn the taps back on. So yeah, that's something we need to keep a very, very close eye on. So remember that number. Remember 21st of July. Talking about the euro, let's have a look where we are in the markets at the moment. As you can see, okay, obviously, those who were kind enough to join me yesterday afternoon, as I was looking at the markets, Euro crashed through parity, which was incredibly exciting. I was probably a little bit over the top of excitement, but that's me. But it's since recovered slightly. Okay, it's currently trading at 1.0027, above that key level again of 1.0027. Like I said, in my opinion, I think there's a lot of negative stuff weighing on the euro. So I do sort of expect in the medium term for it to test parity again and maybe break below it. I do think 21st of July is going to be major key. So we need to keep a close eye on that. As well as that today, like I said, I think the retail sales, that might, again, give the market a little bit anticipation, depending on the result, of another 100 basic point rate hike. So we might see further dollar strength. So the euro might be under pressure again. But for now, like I say, the market's got a little bit of that Friday feeling. Little bit of like sideways trading momentum. But anyway, as it stands, euro is currently trading at 1.0026. We have a quick look at the sterling as well. The cable, British pound, US dollar, pretty much the same story at the moment. Currently trading at 1.18232. Yesterday, it came under horrendous pressure again against the greenback, and it actually fell to us nearly just above 1.17550. Currently sideward trading. Again, like I say, it's got that Friday feeling too. Retail sales, US retail sales, again, could put it under more pressure depending on the result. If you look at the dollar yen, still very much in a bullish uptrend. Again, sideways, got that Friday feeling. Currently trading at 138.83, but still got that 139 level in sight. And potentially many analysts do think that 140 could be on the cards at some point as well. Let's have a look at oil as well. Oil, again, Friday feeling like the whole market is. Currently trading at $92.78, so under $100. If it maintains like this, it's going to be one of the first weeks in a long time for oil to close under $100 a barrel. So that's something to bear in mind. Gold, okay, I'm going to talk about gold just once. I know I talk about gold all the time because I'm a gold bug. Gold still under pressure by the US dollar, being held above that psychological level of 1,700. Currently trading at $1,702.71. Again, like I say, it's going to be pretty sideways today until we maybe get the US retail sales or some other key breaking news. So that's how the market is at the moment. It'd be interesting, obviously, to look at the earnings, keep a close eye on that, and retail sales. So yeah, so like I say, the key events for today is obviously, like I said, US retail sales. Let's see how that comes in. If we do get a stronger reading, will the market then get back to 100 basic point rate hike? If it comes in as expected or lower, will the market just sort of assume it's going to be 75 basic point rate hike at the end of July? As well as that, today we got the Michelin consumer sentiment, so that's worth keeping an eye on. As the market stands, currently the FTSE 0.19%, DAX currently trading at 1.19%, Euro Stoxx 50 currently trading at 0.02%. So like I said, fairly tepid start to the day. I don't blame the market. It's been an exhausting week, so I will probably like to take a slightly more chilled Friday too. Anyway, don't forget you can ask me questions anytime you wish when I'm live on there, or simply say hello if you wish. Entirely up to you. How is everybody today anyway? Everybody having a good Friday? I'm glad it's the weekend coming up. Yeah. Like I always say as well, if you think of a question later down the line, after I've gone off air, don't forget you can put it in the comments on either Facebook and YouTube. I will see them and I will reply to that question next time I'm live on air. So please don't, do that as well. But anyway, on that note, I think obviously there's no questions. Don't forget, I'm back on air again this afternoon at 1 p.m. UTC to discuss how the European session is going and how the US session is opening. Plus, it will be just after the US retail sales as well. Because I'll be going on that, say, 1:30, 1:15 p.m. UTC. Retail sales coming at 12:30, so we can have a look, see how that has impacted the market too. So that could be quite exciting. So please feel, if you can, come along and join me. It should be quite an interesting afternoon session. Plus, don't forget, it's a Friday. I always do my weekly wrap up of the market as well on the Friday afternoon session. So please come along. Anyway, hi, hello, hi to you too. Hope you're well. Okay, if there is no questions, not a problem. Don't forget, as I always say, if you're watching me on Facebook and you've liked this little video, by all means, give us a follow if you like. If you're watching me on YouTube and you've enjoyed this little episode and found it interesting and insightful, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And, if you've enjoyed this video, found it useful, and more importantly, you put up with me for being over the top excited about the markets. I can't help it. I love the markets. Then give me one of these. It's nice to know that you're liking what I do. I've got a couple of likes already, which I really appreciate. I do always appreciate those likes. Anyway, till next time, till later this afternoon, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.